The government came out with its first print of our nation's GDP, or gross domestic product, for the last quarter of 2013, and the results were surprising to say the least. The economy actually contracted by 0.1%. This is coming off a second quarter figure of plus 3.1%. Has the economy fallen off the cliff, or is this the pause that refreshes? The short answer is that it is too early to tell. The initial GDP release will be revised 2 additional times as the government receives and refines additional data. Don't forget, the U.S. is the largest economy in the world, and it takes a significant amount of time and effort to come up with a number that accurately reflects the richness and diversity of our economy. Depending on the data that is initially gathered by the Commerce Department, the final results can vary greatly from the initial estimate. For example, as we mentioned earlier, the third quarter of 2012 grew at a 3.1% rate. However, the first estimate was at a 2% annualized growth rate. So until we get more revisions, we would not be too concerned that we are beginning to slide back into a recession. It should be remembered that the government can control GDP to a certain degree by manipulating its rate of spending. As you may recall, the so-called fiscal cliff caused much uncertainty, and it undoubtedly had a dampening effect on last quarter's growth. It is interesting that the stock market has not paid much attention to the latest negative growth figure. If the market were really concerned about stalling growth, and by extension weakening corporate earnings, we would have witnessed a much more dramatic move down. Despite the GDP, our market has completed its best January in 15 years. The economy may be in a stall, but the market doesn't believe it. I'm Tony Ogorek.